Namaste friends, welcome to Gyanved channel. Let's see how we are checking today's video about the top 3 hybrid equity funds, how we came to the winner. If you are new to the channel, please subscribe and press the bell icon so you will get notification for our new videos about the investment ideas. Before we touch to the idea of the equity hybrid funds, let's see what is the debt mutual fund. So normally these funds invest in government debentures, corporate bonds or securities. Mostly these are like safe options. In other way, equity funds invest mostly in the stock market, and there are multiple types like equity hybrid, then mid cap, small cap, large cap. So we know there are some pros and cons about the debt funds and equity funds. So that's how a new category was introduced initially, which was called as the balanced mutual funds, and according to the allocation type, later they are being called as hybrid mutual funds. So roughly we can distinguish into two types. One is equity hybrid fund and one is debt hybrid. When we call a fund as a debt hybrid fund, when more than or equal to 65% of the amount is allocated in the debt. Remaining 35% can be in equity or cash or any other equivalents. Now let's see what is equity hybrid fund. Here, normally the allocation for equity will be 65 to 80%. Remaining amount can be allocated in debt funds or cash equivalents. How do we compare the risk between these funds? So let's say first type as a debt fund. Normally it gives a low return, but they are low risk funds. Then debt hybrid. This category we can call it medium low risk, and the returns also like medium ones. Then comes to equity hybrid. So these are little bit higher side of medium risk, and then return also like medium high we can say. In equity, we will have high risk and higher returns. When we invest in equity hybrid funds, what are the features of these funds? We have an option here within the same fund scheme to allocate our amount into multiple asset classes. Also, we can have a diverse allocation, which may not be possible if we want to do at our own. Also, these funds will be able to balance the risk whenever the market is volatile. It manages this volatility better way, and the return to risk ratio is much better when we compare it to the equity funds. Who are the investors for which these funds are most suitable? If you are medium or long-term investor, these funds could be good for you. Then if your risk ability is above than the average, then these funds are for you. If you want to have a balanced portfolio allocation where you want to have some funds secured in the debt or cash equivalents and some you want to take advantage of the stock market movement, so these funds are right for you. Also, if you are SIP investors, if you don't want to do the lump sum but still want to make better than inflation rate returns, equity hybrid funds could be a good solution for you. Now the main idea for this video to find out top 3 equity hybrid funds. What are the criteria that we have evaluated for these funds? So we have taken into consideration such funds which are present in market for at least 10 years. We have not taken any newer schemes into considerations. We have compared their 10-year returns, 5-year returns, 3-year returns, 2 years, even 1-year returns into account. Only comparing those returns, it's not enough. We have taken additional criteria also into consideration, like their risk to return ratio. Then we have checked their minimum 10 years of SIP returns. We have checked the expense ratio. Also, we have checked what is the CRISIL rank. CRISIL is our institute to rank these funds according to the performance. So with this criteria, we should be able to find out best funds for your investment. When we sorted number of funds, which are more than 30-35 funds, we came across 10 funds which we can compare and find out best. So one of them is Canara Robeco Equity Hybrid Fund, then DSP Equity and Bond, Franklin India Equity Hybrid Fund, HDFC Hybrid Fund, ICICI Prudential Equity and Debt Fund, L&T Hybrid Fund, Principal Hybrid Equity Funds, then Quant Absolute Fund, SBI Equity Hybrid Fund, and last one is the Tata Hybrid Equity Fund. So in this chart, you can see what are the returns of these 10 funds for 10 years. So we have taken into 1 month, 6 months, 1 year, 2 year, 3 year, 5 year and 10 years also. This AUM is nothing but how much asset. So we have seen here the quant fund is showing little bit higher returns for 10 years, but the AUM is lowest. So this is very small funds. So we'll check the other factors also. And when we checked the CRISIL rating, so it was not available for quant and then for the HDFC hybrid fund also. So rest of the funds you can see their returns. If you want, you can pause this video for few seconds, take a look and then move ahead. From these 10 funds, now we have chosen a top 5 based on their returns for these many years, and then we have chosen top 1, which is the Canara Robeco, DSP, HDFC, ICICI and Quant. Among these, we need to find the top 3 funds. So how? Just take a look. Let's see the comparison for the 1 month chart for 5 funds. We have compared it along with Nifty 50. So we can see all these 5 funds have performed better than Nifty 50. And here, if we see the blue one, right, which is at the top, which is nothing but the Quant Absolute Return Fund. Then if we check 6 months performance, here also roughly all these funds have beaten Nifty 50 index also. So these are, so you can see here Nifty 50 return is showing around 11%, whereas the Quant Absolute Fund has given 30+% returns. When we check the 1 year performance, even here you can see the Quant Absolute Fund is far better than the other peers. As we know, last 1 year the growth was tremendous in the market, so we can't take into that consideration to find out which fund is the best. So we have compared the 5 year chart also. So here also you can see all these funds except these two have performed better than Nifty 50. Here also Quant Fund is the at number 1, then ICICI came into number 2, and after that DSP and Canara are moving. Now let's take into consideration how is the SIP performance for these 5 funds. So we can see here the Quant Fund is showing the top performance here, which has given like 2.76 times return. So we have considered 1000 per month. So for 10 years you would have invested 1 lakh and 20,000. Then second column will show you the return what you have got after 10 years. So first one is the quants. At second position we can see ICICI Prudential, Canara, and Canara Robeco is at third position. So we need to check the fund allocation also. Why this is important? Because this will define our risk and potential return ratio. So we have seen here. Now in this case, Canara Robeco having the least allocation in the equity, which is 73%, but quant fund is allocating almost 80% in the equity, so risk is more here. And then if we compare, the quant fund is allocating only 2% in the debt, rest others they have kept into cash and cash equivalents. So in this case we can say the Canara Robeco is much better, which we can say low risk and higher return. Then middle 3 funds HDFC, DSP and ICICI are looking like average risk and above average return. Quant is, it is having above average risk and higher return. Also, we should consider what are the expense ratios, because expense ratio normally eats our returns. So here we can say except the quant fund, other funds are having comparatively less expense ratio for direct and regular funds. Why quant is having higher expense ratio? There is one reason. If you remember, it is just having 52 crores around amount, and if they have to manage their funds with that amount, so their percentage is going little higher than others. So we have done this exhaustive exercise, and now this is time to come for our ranking. So video doesn't end it here, friends. Please watch it till the end so you will find the complete detailed analysis. So let's look at which is at the third position. ICICI Prudential Equity Fund is coming at third position. Then second position is coming for Quant Absolute Return, and then first position has been grabbed by Canara Robeco. So if we see the comparison of these three funds comparison, so you have seen Quant Fund has given higher returns than Canara Robeco, but as we have compared the CRISIL rank, then the AUM, risk return ratios, then as per our understanding, Canara Robeco should stand at the first. But all these funds, three funds are good only. You, if you want, you may choose other funds also, so you can check your risk potential, what type of returns you want, and then take the decision. So if in case you are convinced with our analysis and want to invest in these funds, what we suggest, you first check your risk ability, whether your investment advisor, whatever research you are doing on your own, supports this analysis. Then it is better if you consider to invest in the SIP approach. If you want to have the lump sum, initially you can put into debt fund, and then subsequently you can move in the STP. It is better if you have diversification done. We have some other videos also made on the debt fund and diversification, flexi cap funds. You can take look at those videos also. And it depends on your investment horizon. If you are medium or long term investor, these funds will be good for you. Friends, Canva channel will come many videos like this. If you like this video, please subscribe, like and share. Don't forget to press the bell icon so you will get the notification. Take the decision only after discussion with your investment advisor. Thank you. Namaste.